I think a lot of us are have sort of grown up sort of thinking, the market is the stock market, and stocks do well in certain periods and don't do well in other periods.
Mm-hmm.
But the reality is there's a lot of other financial assets out there that, because of their nature, do well in environments when stocks don't do well. Now, most people have bonds and they know something about bonds. The trouble with bonds is usually people are holding too small a portion of their portfolio in bonds, or they're holding bonds that have too little volatility. They're not moving around enough relative to the stocks that are moving around a lot. But bonds are a good asset that typically outperform in environments where growth is slowing. And that is an environment typically when stocks are falling. But there's a lot of other assets that are out there that also do well in those sorts of environments. For instance, gold, which has a variety of different properties, outperforms bonds 60% of the time in periods where gold outperforms bonds 60% of the times in which stocks are down. Mm-hmm. So it would make sense if you're building a portfolio, you have your stocks, you have your bonds, that you should also have about as much gold in your portfolio as you have bonds in your portfolio, because bonds are outperforming gold is outperforming bonds often when stocks are down. And then further, there's other assets that are out there, things like commodities that do well in high inflation environments. For instance, if we see the last 18 months, what we've seen in the last 18 months is that commodities are one of the few assets that are up. Stocks are down, bonds are down, gold is flat, and commodities are up. So, and why is that? Because we've been in an inflationary environment. And so why not add commodities to your portfolio in order to help you do well in an environment where inflation is elevated relative to expectations? And so the reason why I sort of go through each one of these different pieces is each one has a certain set of properties that are related to a certain set of macro environments and market environments, economic environments, that they do well in certain environments. That it's not just about holding stocks, it's about holding a diverse set of those assets that do well, at least you have something doing well regardless of the market or economic environment.